So we had the phone call between the two presidents of the U.S. and China. They're going to resume talks. Market initially got a rally on that, but then Tesla shares dragging down the market. Tesla tanking about 14%, being a drag on the market. The Dow ended down 108 points, down 0.25%. The S&P down 0.5%, down 31.5 points. NASDAQ down 0.83%. The Russell down just barely, pretty much flat. The VIX was up just under 5%, back above 18 to just under 18.5. And again, Tesla shares weighing on the market today. Now, don't forget, we're going to get that jobs report tomorrow. That could be a market mover up or down, depending on how it comes in. Right now, it's expected to come in at 125,000, lower than the 177,000 from the previous month. The unemployment rate is supposed to hold steady at 4.2%. We got a weak private payrolls number earlier this week. We had that last month, a miss with the private payrolls, but the jobs report still came in okay from the Labor Department. We actually will see negative numbers when we move closer to the recession or on into the recession. Eventually, we'll see job losses, but we'll probably buy a little bit more time for a little while. So we'll see how the market reacts to the jobs report tomorrow. We'll see how it comes in. Right now, 125,000 jobs are expected to be created for the month of May. Now, don't forget, we're going to get that CPI number, and some economists are expecting it to go higher. They don't have the forecast here, but some economists do expect it to rise. If it does higher on a year-over-year basis with the headline number or the core, that could be something that rattles the markets. Concerns that all the tariffs are now starting to cause inflation to turn back up. Actually, inflation is going to turn back up. The money supply is increasing. Eventually, we'll see the inflation indexes rise because inflation is caused by an increase in the money supply. Just be aware of that report coming on Wednesday. We have the producer price index, which is wholesale inflation, coming on Thursday. Jobs report tomorrow. So some important things to be watching. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts and the indicators, please let me know that you like them by supporting the channel today. Just follow the link below. It'll take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. And I just ask that you partner with me and try to help out, do what you can, rather than trying to sell you a bunch of stuff. Most YouTube channels have sponsors. I choose not to do that. But it takes a lot of time and effort to do this. If you like the indicators, let me know that by supporting the channel, and you'll see some absolutely amazing indicators in this video. Thank you for considering supporting the channel. Momentum is still bullish. Trend signals are still bullish, but we have negative divergences. They may not be done. You get multiple point negative divergences developing, but we've gone to new highs. Start getting a mild pullback or a reversal. We can rally with the jobs report, then maybe we bounce off the 10-period moving average here on NASDAQ, but Bitcoin's taking a hit. Bearish momentum signals, bearish trending signals now. We had them mixed for a little while, but now they're all turning bearish. So NASDAQ and S&P follow suit. NASDAQ daily chart here. Green awesome oscillator bar. Bars turned right back to bed. They're red. They're still a positive territory, but the risk is we have these divergences completing here with this pop higher that now gives us either a pullback or starts a reversal. Same thing on the stochastic, so that's the risk. Same is true for the S&P 500. Let me just mark it. This is a daily chart right here. Again, we've seen a bullish reversal of conditions. We now have a divergence. Is that it? Or do we start seeing more green here, as I've talked about, by a little bit more time? We'll be watching to see if we can get the 13 or 9 counts completing here over the next week or two on the S&P 500. They're very much in play. We go into next week. 9 counts are canceled out. You still have the 13 counts in play. We move closer to the Fed meeting. So just some things to be aware of. Signals are still bullish. Momentum is bullish. Trend signals are bullish. Not for Bitcoin. Does the market follow Bitcoin pulling back? Just be aware of that. You got the bears out there saying it's over, it's over, it's over. We're now starting the next leg down of the bear market, and I think we'll get a pullback, or maybe at some point a bigger pullback. I don't think we're getting the next leg of the bear market. I don't even think we've started the first leg down of the bear market, because I don't think the bear market has started yet. Got the bears out there on social media telling us it's over, just like they did back over here, and they've been saying it all the way up, as I've talked about yesterday. Signals continue to remain bullish. We'll see if we get a pullback. The bears telling us it's over. They told us down at the bottom we were going to have the Black Monday crash. Bottomed and we rallied up. Is it 23.5% now, or whatever it is on the S&P, and 1% on the NASDAQ? Been telling us that the next leg of the bear market is constantly starting all the way up. I think they'll be wrong at this time as well. When we go make new highs, they'll throw in the towel. Yeah, even though we were down today, again, signals are still hanging in there. Here, signals still bullish with the S&P, still hanging in there. Possible divergence right there. So far, signals hanging in there. Still got a blue line, blue bars, green going on here. So again, I'll be watching. Does that change? I still think we have a shot of reaching the February high for a test, or exceeding it and reaching the trend line that I've talked about. That's certainly still possible for lower high or a higher high reaching the trend line, going up to test the February high. Less signals start turning back to bearish for the S&P. Bearish signals after a divergence after the February peak with January and December led to this sell-off right here. Some indicators forming a little divergence right here with the jobs report, or as we go into the CPI next week. Do we start selling off, or do we go higher and then start selling off and maybe drag it out into the Fed meeting just under 2 weeks from now? As I've said, the CPI, again, it's going to tick back up. The concerns about inflation, tariffs and everything, whether that's with this report or not, my guess is, again, you're going to see it happen in the near future. With this report, or in the next report or two, you're going to see it happen, and it very well could be this report. We're at a 4-year low with inflation. It's likely going to tick back up. But right now, S&P still hanging in there here. Still bullish here. Still got green bars here. We flipped the signal back to bullish yesterday, and it remained that way. Had red bars throughout the decline. We got the higher low, higher high, flip back to green bars. Have been green ever since. S&P daily here. Things still bullish here. Things still bullish here. Again, risk of a divergence though. Things still bullish here. Things still bullish here, but again, we have a risk of a divergence now. We went slightly higher, Line turned back to bullish. You have the possibility the divergence is done, or we could build upon it. A little topping signal here. This could just be a warning of a top, or again, it could be a short-term top. Again, these signals, the tops, it's just looking at short-term momentum, just like it nailed the bottom over here and the higher low over here. It's just looking at short-term momentum. Shaded area tells us a squeeze move is coming, either up or down. It's telling us one is coming. Right now, signals are still bullish. We'll see what happens. If we start to sell off, we start seeing things go bearish, we start seeing momentum go negative, then we can try to get a bigger pullback right now. Now, signals are still bullish on the S&P 500. Still bullish here. Still bullish here. If we can continue the rally to try to get closer to the February high, you might try to tag that upper Bollinger Band. I talked about this earlier in the week. Signal still bullish here. Again, mark the decline, the reversal. So if the rally's to continue, signal's got to remain bullish if we can get closer to that February high, or maybe even exceed it. Signal still bullish here. Now, we've already seen previously several of Bitcoin's trending signals turn bearish. Now we're seeing more of them turn bearish, and it's dropping. Right now it's down about 3.5%. The S&P join it, and we fall short of the trend line. I've talked about the lower high scenario or the higher high scenario. Do some different charts, see what you think. Right now, the trending signals are still bullish. Bitcoin, they've changed. Now, with today's sell-off, we're seeing more change. So do the S&P and NASDAQ follow? I think Bitcoin still has a shot at setting up a larger divergence. Talk about that in my next Bitcoin video. So the signals are still hanging in there for the S&P. They're not hanging in there for Bitcoin. So if Bitcoin starts a bigger sell-off, the bigger pullback now, the S&P and the NASDAQ might be right behind it. But at the moment, the S&P signals, even though we had a down day, are still hanging in there. We'll be watching to see if that changes. Now, at the highs of the session, both the S&P 500 and the NASDAQ both tried to get a 13 count, but we ended up selling off, pushing back down. We couldn't close above the bar from 2 bars ago. At the intraday highs, we were. And a 13 did appear, but we didn't close that way. So you still have a 13 count in play. We still have a 9 count in play that could complete by tomorrow. If we close below the bar from 4 bars ago tomorrow, the 9 count will be canceled out. The 13 will still be in play. If we get the 9 count tomorrow on Friday, say we try to rally with the jobs report, then the 13 count will be canceled out if it's the same bar as the 9 count. If we push above the bar from 4 bars ago with the 9 count and are above the bar from 2 bars ago, the 9 count will override the 13 count. The 13 will be canceled out. We'll have a 9-9 pattern, reversal pattern. Still may try to reach this area. We'll be watching. Again, I told you these highs could be pointing to the next high. We're within striking distance. I still think that's very, very possible. Signals remain bullish. We reach this level with the jobs report. Talked about possible sell-off with the CPI. Maybe we rally with the CPI to the Fed meeting. But again, in the next 2 weeks, either next week or the week of the Fed, less than 2 weeks from now, I think that you will see a peak here. Maybe this is it. We need to see more evidence of that. Just as I told you about the trend lines that mark the bottom, the horizontal support, the rising trend line from the 2009 low. Could this trend line stall the advance? Possibly. Maybe we don't reach it. Maybe it's close but no cigar. As traders, we need to be looking for clues. But I do think that you've got a shot at completing a 13 or a 9. Had we gotten the 13 today, you had a shot at completing both. 13 followed by a 9, which I talked about in yesterday's video. So NASDAQ, if we go higher tomorrow, get a 9 count, cancel out the 13. We don't complete the 9 count, and let me just show it to you up close here. Here you can see the 9 count is above the bar. We're up to bar 8. The 13 count is below the bar here, and count, you can have no interruptions. We have to get a 9 count tomorrow, but if we close below the bar from 4 bars ago, 1, 2, 3, 4, if we close below this bar right here, then the 9 count gets canceled out. We still have the 13 in play. So again, we'll be watching to see how all of this unfolds. NASDAQ daily chart here. Like I said, even if we don't reach the trend line, which I think would be a really nice looking neckline for an inverse head and shoulders pattern, even if we fall short of that level, you still have this pattern in play. But again, I still think you've got a good shot at reaching that level as long as the trend signals remain bullish. We know that we still have a bullish reversal of conditions for the NASDAQ and S&P. So again, there's still the possibility of reaching these levels, but at some point you're going to get a bigger pullback, and maybe this pattern comes into play. So tomorrow we could get a 9 count completing on the NASDAQ, or it could get canceled out. The 13 is still in play. Today we did get a 13 count on the S&P at the intraday high. It went away because we didn't close there. We had a down day. We didn't close above the bar from 2 bars ago. Intraday we were above it, but we didn't close that way. So again, you'll have a 13 count in play. You still have the 9 count in play. Again, over here, we got a double sequence count sell signal at the December top. We went sideways. We formed the diversions. Eventually got this 13.9. The 13 was the 9.13, I should say. The 13 was the higher low. I think that's the ABC move for the correction. Right now we have a 9, and we're in a trend extension. Do we complete a 13 or a 9, or maybe both? And these counts just mark price exhaustion. Price moves in one direction and reaches extremes up or down. We're seeing these counts begin to form, and they either mark a pullback like we have with the 9 count over here. They mark a pullback followed by a trend extension right here, or they mark a reversal like what we got right here. Eventually we did see that reversal happen after going sideways slightly higher. Sometimes you get an immediate trend extension without any kind of corrective move or pullback. If the rally can continue, and did here with the Elliott wave count continuing. Remember, Elliott wave speculation. I never, ever, ever trade Elliott wave. I use my indicators to make my trading decisions. Just try to determine price direction by validating or invalidating wave counts. Have different wave counts going on. You don't know direction until something gets validated or invalidated. So I don't choose to trade it. There's too much speculation involved. But I do believe that we are in wave 1. Probably not done yet, but we'll see. Bitcoin did make new highs and then is now getting some volatility. Do we see that with the S&P and NASDAQ before it gets more volatility? Maybe. But we're up to bar 12 with the 13 count below here, below the bars. We tried to get 13 today. It was not successful. Got to be above the bar from 2 bars ago. We were not. If we still get the 13, you still might complete the 9 count, which is going to finish by Monday. We're up to bar 7. Tomorrow will be bar 8 as long as we don't close below the bar from 4 bars ago. If you do close below the bar from 4 bars ago, 1, 2, 3, 4. If you close below the bar directly below from 4 bars ago, we're really close just right at that level. And it's going to cancel out the 9 count. The 13 will still be in play, but it will get a price flip and cancel out that 9 count. So do it over here. We got to bar 8, and then we canceled it out, and then now we're back up here trying another 9 count. Does this one get canceled too, or is it successful? Be watching. Down over here at the bottom, we got to bar 8. A little hard to see right there, but we got to bar 8, and this reversal bar canceled out the bar 9. We didn't get it, but we bounced off major support levels, a major trend line on the S&P going back to 2020, horizontal support. It was close but no cigar. You only got to bar 8 here. You only got to bar 8 here. Sometimes the counts complete, sometimes they don't, but you still have 2 counts. You have a 9 count. Even if it goes away, you still have the 13. As I said, with the NASDAQ, if you get the 9 count, it's going to cancel out the 13. You got to get the 13 before the 9. If we get the 9 count, you have a 9-9 reversal pattern. If you get the 9-13-9, you'll have another reversal pattern. Or if you just get the 9-13, that's also a reversal pattern. So can the rally continue? These are some counts I'm paying close attention to. Counts may not mark the top, get the count and even go higher. Sometimes you go a little higher and then you see either a pullback or reversal happen. The counts are just telling you that prices are getting tired. So some counts to be aware of as we go into tomorrow. Does the NASDAQ complete the 9 count tomorrow, or is it canceled out? Does the S&P complete the 9 count on Monday, or is it canceled out? And then we'll be watching these 13 counts. Whoops, sorry about that. Wrong button. Now, I'll show you some things on the S&P and let you decide. Do you think that we'll get a lower high, or do you think we'll actually reach this trend line? And it may be NASDAQ reaches it, but the S&P does not. Sometimes they do diverge at turning points. We've been talking about this V-shaped recovery. I've been talking about a divergence developing here. We do have a divergence now. We did move slightly higher there and lower highs on the RSI and the MACD. Is it done? And it may not be done. Or we still may see the RSI attempt to move to a new high. That's still possible. You got the price still above the 10. The 10 is still above the 20-period moving average. We're still above the momentum cloud here. Start seeing some weakness, and the divergence could give us a bigger sell-off. Marking this count as an ABC completing here for 4. This is the first wave of our larger wave 5. Remember, I have other ways to count this, but right now I'm looking at a 1, 2, possibly 3, 4, and then maybe 5 here. Possible that this is a larger 4 in an expanded flat. That's certainly possible, and we get something like that. That's still on the table. Start to sell off. If 4 completed here with our hollow red candlestick at the 200 period moving average, can we make our way, climb our way higher towards this red trend line? That's what I'm watching. So you do have a divergence here. What becomes of that now? Do the trend signals all start turning bearish? Does momentum start flipping back to bearish? Now, momentum is bullish, and so is the trend signals. So that flip back to bearish. Right now, Bitcoin, momentum, and trend signals are now bearish. The S&P follow Bitcoin. Now, if wave 1 completes here with a lower high or a higher high, wherever it finishes, again, I'm going to be looking for an ABC move back for a wave 2, and I think you'll test the 200 period moving average. Can continue the rally. We may pull back to the 200 period moving average for a higher low. If we start pulling back without making a higher high, did I say higher low? If we make a higher high over here, then you can pull back towards the 200. If I misspoke a moment ago, I'm sorry. If we get a lower high, then we might move closer back towards the 50 period, either moving higher but falling short of that area as the 50 is still trying to turn back up closer towards our 200. The black line is the 200, the green line is the 50 period moving average. So this is my count. It is speculation. I do have other counts, and I'll be watching. We start seeing stochastic rollover, MACD start to turn sharply down, and RSI start moving down below this low that separates the two peaks. Trying to get a bigger sell-off here, or can we still claw our way? And I'm just trying to tell you, right now, momentum and trend signals are still bullish. I think you got a good shot at the 9 and 13 count, or one or the other playing out on the S&P, and both on the S&P, and one or the other now on the NASDAQ, either a 13 count or a 9 count. Now, previously I had this count. We've gone above that high. We've gone to a new high. Another way to count it could be like this, possibly, if we start the bigger sell-off right here and now. And again, I'm open-minded to that happening, but we got to see momentum signals turn bearish, then we got to see trending signals turn bearish if, in fact, we're peaking, go a little bit higher and peak without moving to a new high. This count is still a possibility. And again, if we pull back right here, right now, then we would be looking at the 50, we'd be looking at the cloud in here. Again, can we reach trend line, go higher before a bigger pullback? That's the $64,000 question. Right now, everything's bullish, so we still could. I'm telling you that if we start taking out the 10 and 20 period moving average, we start seeing the momentum signal shift and then the trend signal shift, then you can get the bigger sell-off right here, right now. Bitcoin's at risk of doing that because its signals are all turning bearish, both momentum and the trending signals. Now, I want to show you this because this is another possibility. And again, I've talked about the different counts here, the black count, the red count, the blue count. What if the black count is in play and we got the wave 1 and 2, and then we have these smaller microwaves, 1, 2, 3, 4, 5, and now we get, and that completes the 3, so you have 1, 2, and 3, and this whole thing is an extended 3, and now we get 4, and then we go up and still get 5. Drag out on into the Fed meeting, we'll be able to reach this level or come close to it to challenge our February peak. So again, I want to remain open-minded, different possibilities, showing you a couple different possibilities. It's really represented by these 3 counts right here. One is that we're in the 5 and we just keep going here. The other is that we've got this black count, this wave 3. Now we get 4 and then we get 5. Another is that we still have this larger wave 4 going on and maybe an expanded flat, as I mentioned. So there are different possibilities. That's why I never trade Elliott wave. It's speculation. I am using it to try to validate or invalidate price direction. Example of that is that we have an A, B, C corrective move right here. Clearly corrective. That's why I told you back over here at the hollow red candlestick we were bottoming at key support levels. What I'm trying to do with the Elliott wave is to determine, do we have corrective moves? Do we have impulse moves? I'm using it to try to determine the trend. That's all I use it for. Again, to get a bigger pullback right now, you could still just be a wave 4 with this red count. It could just be a wave 4. And we had the extended wave 3. Remember, I've talked about this again, the extended wave 3 scenario where we just have this that blows right past the 200 as we've gotten, and we just keep going. And that is that extended wave 3. Or again, if wave 3 is done over here, then again, wave 4 and 5. So we'll be watching, but it is still possible we get a larger divergence developing here if we do even start pulling back with one of these other potential counts. We saw the divergence play out today. We popped higher, got the rally, and then we formed a divergence on the 15-minute chart here. Came back to the trend line right here from late May, and the 200 period moving average. If this level breaks, we'll get a bigger sell-off. 15-minute chart right here, a gap down here to be watching if we do end up starting getting a bigger sell-off. I'm showing you the different counts right here. I have the count that we're already in the 5. Again, here we're at the 50 period. We're pulling back to the 50 period on the 60-minute chart, and the cloud, we start losing this area. Testing the trend line on the 15-minute chart, but over here we're slightly breaching it, going back, connecting this low to this low. We're slightly breaching that level. See if we can still make it. Happens with the jobs report tomorrow. 50 still above the 200 here. Again, this count could be canceled out. One of those other counts might be in play if we start getting more selling. Well, Tesla take a hit. Nvidia has this negative divergence on it. Again, we had it over here, and it's still defining itself here. If the MACD starts rolling over, then we could see NASDAQ get a bigger sell-off. Saying we could see the 9 count canceled out from a 13 count later on. If we've had a wave 3 here with Nvidia and we start pulling back for a wave 4, we may see NASDAQ and S&P pull back as well. So keep that in mind. I want to just talk about these possible divergences on the 60-minute charts. Here's the NASDAQ, and I'll show it to you up close on the S&P in a second. Just on the RSI. We're turning down. We hit this level here. You know, we had these previous divergences give us the volatility previously. If we still try to rally, still get with the jobs report, or maybe on into next week, going into the CPI or with the CPI or something, the next week or two, going into CPI, going into the Fed, if we can go higher, you might end up getting a divergence. Let me just move this over so you can see we might still, if we can try to rally around the cloud, or if we could try to rally here, dip a little bit lower, or try to rally right here now, you might still end up forming a divergence, a multiple point divergence, as we've done at these other short-term peaks. Something to be aware of. Now, if the MACD goes negative and we start seeing the RSI, you can even take out the cloud and back below the 50, we're right at it right now, then again, you're at risk of coming back, getting a bigger sell-off right here and now. So we'll be watching. Coming back to try to test the 200, the black line right here. So just some things to be aware of. Right now, things are still bullish. We're still above the cloud. We're still above the 50 here, but we're testing levels. If we start seeing selling pressure like we've seen with Bitcoin, then the market may get a pullback or try to get a reversal. To the S&P 500, again, the RSI, does it end up trying to turn back up and end up getting diversions before all is said and done? We try to rally with the jobs report. Do we try to rally going into the CPI data next week? If we can rally ahead of the CPI, then you have a shot at getting an inflation freakout with the CPI, begin to see it tick back up, and I think there's a strong possibility that could be the case if we can try to recover right here. Signals are still bullish with momentum and with the trend signals with S&P. The question now is, can they remain that way? As I started the video, I said I was going to show you some charts. Make up your mind. Do you think that we're going to reach this level, or do you not think we're going to reach this level? Do you think that that's it, or we go a little bit higher and fall short of it? That's it, or do we reach this level? Are these highs possibly pointing to the next high? But for right now, my signals still remain bullish. We did an excellent job of calling the day of the bottom, predicting this rally. At some point, the rally is going to end. Right now, my signals are still bullish. Now, NASDAQ got a bearish engulfing candlestick. The candlestick, we opened higher, then we closed lower. It's engulfing the previous day, the small real body, with negative diversion. So there is risk. Let me flip my line here to red, my diversions. There's still risk of a pullback before going higher or stalling the advance completely and starting to pull back towards the 50 or the cloud if we start seeing momentum and trend signals begin to turn bearish. Now, the candlestick pattern, the bearish engulfing, means absolutely nothing unless it gets confirmation and a follow-through. Candles have to get confirmation and a follow-through. So we'll see what happens with that. The bearish inside days over here, bearish inside days only gave us a small pullback here. When we got the hollow red candlestick, see something like that, a smaller pullback. We do have our gap fill area down here. So again, we'll be watching to see if momentum starts going bearish or not. See what happens with the jobs report tomorrow. Go into next week to get the inflation data.